It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Great to see you both on this Thursday morning. Thanks for being here. A lot of down arrows that have been pressuring the market. So it's interesting. You didn't come on here super bearish, Alan. In fact, you're looking for some buys here, right? Tell me a little bit about your first one, and that is DraftKings.
Well, first off, I was expecting a bit of some holiday break, and I meant BREAK here in the markets after the 20% run in the S&P. So that was to be expected. Now, it happened last Friday with some big unwinding. Now we're getting a little follow through this week, but it was only natural to see a pullback after the market move that we had over 2 months straight up from the bottom. So I'm still a believer in the market. I'm just looking at this pause, this pullback as a new opportunity.
Right. I see. So let's get to DraftKings. You're talking about a call here, January 12:50. Tell me a little bit about that.
This is Happy New Year, Ben. Happy New Year. These are January options we're looking at. We got plenty of time.
Wow.
So 75% off its 2021 top, and it's 50% off the May lows. So it's made a nice little bottom here. It's been trading between 10 and 20 since March. So that's 6 months. And it's above that 15 midpoint, which is a key pivot to look at a weekly basis. It's also 30% off its August high. So we've seen a pullback in this stock. So I'm looking to play this here with a January 12.5 call, which is an in-the-money options trading for less than 5 right now. Now, this option was at 10 just 2 weeks ago. So again, it's some profit-taking pullback. I'm still a believer in the larger overall trend. But I'm looking to get back in after this little discount here and to see how it reacts and see if it can get back to the 20 level, which is the top of the range, and have another breakdown.
Right, understood. Okay, so what are you thinking here when you take a look at this, Ben, when you look at this chart?
I see a stock that's come under pressure, Nicole, and Alan, one that still is yet to relent for the most part, still is yet to indicate that we've rejected this lower level. We're actually in a vertical phase out of balance right now as we speak, with the broader market selling off on the more granular 15-minute time frame, and I think that's a good place to begin. When we're talking about trend, we're talking about migration of value to the downside, and here you can see 4 very well-defined areas of consolidation or this horizontal development that have established lower and lower levels. So again, most recently, kind of a chop around 1650 prior to breaking out this week down below that $16 level. And again, just seeking a new area of value at a lower level. Will we V-bottom and work our way back to 1650? That's what the bulls are hoping for. A breakout isn't as significant as it would seem. What is significant, though, is if we start to consolidate and form, again, a new area of value at a lower level, it supports the working assumption this market's trending lower. I want to point out this is only on the 15-minute time frame, though, so let's not get too caught up on the more granular. But when you take a step back and look at the daily, you're going to see that this move we just looked at from 21 down to, again, recent lows is just part of the bigger picture move that came into play off the September last year highs around 64.50 all the way down to 977, and how we've since been kind of chopping around this $15 level. I do want to point out, though, I added a little bit more time to this daily time frame, and I remember last time we talked about DraftKings, we were a little bit concerned about this head and shoulders, some of the selling we had seen as we'd come off that level, but here you can see again a sharp move lower here, down to 977, part of the bigger picture move off the highs that we saw back in the middle of 2021, the spring of last year, up around 974. So again, basically a stock that's been under pressure and that's yet to relent, again, on one that's not rejecting these lower levels as of yet.
Right. That's really interesting. By the way, just some news. Obviously, NFL season's kicking off. They have the top-rated mobile sports book, at least in some places, for DraftKings. There's been a lot of positive comments from some of the analysts over at Needham and Morgan Stanley. But what do you make of a day like today, for example, Alan, when it's down 5%? Does that make you sort of chomp at the bit to even make a quick trade of some sort?
Well, I'd like to see how this market's, if it's going to snap back, and we're going to, we're getting a little bit of some profit taking, like I said, in the macro market. But this at 15 level is crucial to me. So I'm looking at leaning on that level. But I hold up 4 because I got 4 months. Now, it broke out last week, and 2 weeks ago, I'm sorry, it went up above 20. Now, was that a fake out breakout? I don't know, but I'm buying after it came back. I get a second chance to get on board here and let's see if it can follow through in the next 4 months. We got a long time until we have to celebrate our Happy New Year, and this option obviously expires after that, the third Friday in January.
Right, understood. Okay. Next up, we're looking at, when we look at WeBo, WB, 1944 today, your thoughts there?
Well, it's got a bullish divergence bottom. That's what I look for. A lot of these stocks that are oversold, they get set up for these short squeezes. Now, whether it follows through or not, that's always the million-dollar question, and we have to wait to see. But WB is something that's 70% off its 2021 top. And again, bullish divergence, meaning it made new lows, but not new highs and implied volatility. It's come back to this base range here. It's been between 20 and 30 since February. 25 is the midpoint here. And then if it gets above the 25 level, then we can move to the top edge of the range. Again, I've seen some bullish accumulation here at these lower levels, and I'm buying an in-the-money option for January. The January 17.5 call is trading for about 350 or so. And you got to remember, this stock was just at 2250 last Friday. So it's had a pullback, but I'm not thinking I don't think the market's over. And I think from a risk reward standpoint, this is another great setup for a second chance play.
Yeah, okay. And I want to ask you also about just China-based companies in general, but hold the thought, Alan, for one moment. Ben, your thoughts on this chart?
Well, when I look at WB, I see one that's shares have come under pressure basically since the beginning of the year, going all the way back to 36, recently trading down to 17. Much like what we were just talking about in terms of DraftKings, some of the weakness we've seen still have yet to reject these lower levels, just kind of holding near these lows and basically forming a bit of a balance here around this $20 level. I took a step back, though, and looked at the daily time frame, and this is where you start to see a little bit of directional conviction. You can see some momentum to the downside, migration of value, and I've got three really well-defined areas that I'm looking at here. Most recently, we've been consolidating over the last couple of years here around this $50 level, but you can see how we just broke out into the beginning of this year, and it's not really a high conviction like lower lows, lower highs type move, but it is a bit of a grind lower and still zero rejection. Again, similar to what we were just talking about in terms of DraftKings, it's still yet to take out anything significant that was established on the way down. If anything, we're just kind of accepting these lower levels. I do want to point out, though, look at this move from 140 again down to, well, we're trading 1947 right now, but I want to point out here part of the bigger picture move that we've been seeing, and shares have really struggled. You can see from 142 down, again, to 1947, the area. But look at this here. We've got a nice double top that we formed up around the 64, 65 level in February of last year. And then, again, when we revisited that back in the summer of last year. And since then, we've come off. So I see a stock that's come under pressure here, one that's similar to, as mentioned here, DraftKings, unrelenting here, no rejection of this lower level, and unfortunately difficult to get excited about WB when, again, Weibo has come under pressure to the extent that it has.
Okay, and just to get back to you on the big picture here, Alan, is Ben always does such a great job with those charts. How do you feel about, Chinese-based companies? I mean, first of all, social media stocks have been under pressure generally, ad dollars and all that. But how do you feel about this one? Is obviously a social media company. Your thoughts, Alan?
Well, I try not to think. I trade what I see, and I see a chart, and I see a lot of positives here that it's set up for a bullet. So this option, the 17.5 call, the low is at 17. So I've got no problem being, theoretically long or having the ability to be long from 17.5 with 4 months of time for bullish development. It's an in-the-money option. It's limited risk. And again, if something happens in any stock, it doesn't matter. You don't know what could be a negative catalyst or bad news for each and any stock, any individual stock. Then it's a limited risk option. So I'm comfortable with that, and I want to put myself in position for success. If and when it can take out that 22.5 from just last Friday, then that would be a pretty good confirmation that we've made a bottom and we're getting a bounce, and then we'll see how it reacts around 25. The key here is the math. We did this a couple weeks ago, and modest moves in these stocks can produce big gains in the option. Last week we looked at 2 weeks ago we looked at CCJ. It went from 25 to 30. The option went from 7 to 11, and so that's more than a 50% gain. So it's about the math and controlling the risk reward.
Okay. All right. Last but not least, Schlumberger. Tell me about this one, Alan. Why it's on your radar. 36.89 today.
Yeah, so oil here has had a little bit of a pullback once again. Now, we did have a test and reject here last week. I think it made some new relative lows for crude oil itself and then bounced back 10% very quickly. So crude oil always has, price pop potential from a bullish standpoint. So oil's been between 90 and 110 for 6 months largely, leaning on this, 90 level on a weekly basis over the next, couple weeks to see how it responds. But Schlumberger has pulled back. Schlumberger is between 30 and 40 for the last 2.5 months. A breakout of that targets 50. Now, those were the highs in June, which was not so long ago. Technically speaking, this is holding some solid support at that 200-day moving average. We're looking at this level here at the 32.5 call. It's trading for about 7 or so, maybe a little lower than that. 32.29 is the lowest level since January, and that was just made here in July. So, again, you have the ability to be long from an extremely positive risk-reward level, and you give yourself 4 months of time. A lot can happen in the energy oil markets in the next 4 months for sure.
Right, yeah, without a doubt. And you have a strong dollar. Oil's pulling back right now, but we constantly see that fluctuation and volatility. Tell me, Ben, your thoughts.
Well, this is one that's a little bit deceiving when you look at the more granular time frame, the 1 hour, because we have been trending higher. It's giving back some of the gains that we saw into the end of August here. You can see we traded all the way up to 41 from 30.65. So a nice move up off the July lows, that's for sure. But the 4 hour shows something a little bit different, similarly to what we were talking about in terms of WB, as far as a similar situation as far as DraftKings, right? We've got the weakness coming into play into the summer, sideways consolidation, simply put, zero rejection of lower levels here that were established. Now you can see that we actually did try to get something going up to this $40 level, but this is what I like to think of as kind of like an elevator shaft, and you see price just open up the door to the downside like that and just break down as we saw from 49 all the way to the July lows, as Alan mentioned, around 31, 32. And again, we did just try and inch our way up, but I always say if you fail in a market that's been trending lower, and here we can see since the June highs we have been, if you fail to take out the upper extreme of a range that we've been in, and prior to trying to break out, this was the upper extreme was around 38.50, and we did fail. And so now if we work our way through the middle again, it opens up a door for a retest. So we're looking at potential weakness through 36, 35. I know Alan's looking at the 32 level, but I think if we get through 36, 35, could be like a hot knife through butter into this 31 level, the lows that Alan mentioned from July. Now, I did take a step back and looked at the weekly time frame, and I saw two really well-defined areas of value that have been forming. And again, kind of talking about if we were to make it through that 35 level, that opens up a door for a retest of, and maybe potentially back into the July lows. But you can see here on the weekly time frame, if we get some momentum through that 35 level, ultimately, if we could get through 26, 27, well, in the bigger picture, then we open up a door for a retest, potentially those lows that we saw, pandemic lows around the spring of 2020, down around that $10 level. So again, potential for a significant move here if we get further weakness. But this first pivot level, 35, 36, to keep an eye on if the selling from 41 continues.
I think you did a great job, and I'm glad you showed the pandemic moves too. Good on that. Alan, any final thoughts, big picture or Schlumberger?
Well, I'm starting to believe that Ben's catering to the audience. He's essentially telling everybody that gas prices are going to go straight back down. So he's saying that the energy rally's over and that we're going back to those COVID lows. So that'd be great for people's pocketbooks, but I don't see it that way from a trading standpoint. I want to put myself in position because I still see a lot of potential bullishness, and there are a lot of factors that can drive energy prices. And we've seen that over and over and over again. So I don't think that's going to change anytime soon. And I certainly don't think that bullish momentum is going to change in the next 4 months. Energy stocks still have the lowest PE of any sector in the S&P. So I still look at those with a lot of opportunity. And we talked about just 2 weeks ago, we talked about Halliburton, and that had a breakout. Now that's come back just like Schlumberger. So they very much the same pattern, upside potential.
Ben, I'll give you a 10-second rebuttal.
Well, I'm looking at crude oil, and it's testing key support here around the $85 level. If we could pull this chart, you can see coming off 130 from March. If we open up the door to the downside here, break down below 85, we're back to levels we haven't seen since January. And the only thing I'm looking at, and don't get me wrong, I'm not cheering this on because I think it's a sign that the economy is weakening, but look at prices at the pump. RBOB gasoline, it's actually been leading this move lower, back down below 240. So if this is any indication of what we can expect for crude's got a little bit of catching up to do to the downside.
My play hedge.
Okay. All right, should we leave it there? We gotta go. Alan Nuckman, Chief Market Strategist, bullseyeoption.com. Ben Lichtenstein, thank you both very, very much.